Welcome to CurrencyCast. What is the outlook for exotic currencies? And how should treasurers manage liquidity and foreign exchange risk in the midst of heightened geopolitical tensions? Welcome to CurrencyCast. My name is Agustin McKinley. I'm the senior financial writer at Cantox and your host. In this episode, we have the pleasure to welcome Marianna Polykrati, Treasury visionary and co-founder of Tetraktys Treasury. Marianna, Kalimera, and thank you for joining us in this episode of CurrencyCast.
Thank you very much, Augustine, for having me, and it's a great opportunity in order to talk a little bit about the exotic currencies and in general FX and hedging. So I'm thanking you a lot for this opportunity to talk and talk a little bit about the pain points that we treasurers have regarding FX.
Absolutely. Now, Marianna, can you start by introducing yourself to our audience?
Yes, of course. So basically, I would say I am a corporate treasurer till the bone, right? So I have been in treasury the last, I think, more than 20 years. Previously, I was like all treasurers in banking. I passed from very large Greek multinationals in the treasury, and the last years, I am now the group corporate treasurer of AVRAMAR, a fish company. And also, I am also the co-founder of the Tetraktys Treasury, which is the first Greek treasury consultancy company. So this is pretty much my background and what I'm looking at.
All right. And tell us, what does a treasury consultancy do?
Wow. Well, a treasury consultancy, what does it do? Especially if you have the founders, the co-founders, we have 4 people that are here participating. If you have corporate treasurers, what we do is we advise in things that have to do with the day-to-day in treasury. So we are talking about debt management, cash management, risk management, and at the end of the day, a lot of the bank account management. So we are consulting in things that we have dealt as ourselves as treasurers, corporate treasurers, and are still dealing because most of us are still corporate treasurers, and we deal in this.
All right. Now, let's start the conversation by tackling the subject of exotic currencies. Exotic currencies, well, they're not important, right? Because they make up a small part of the overall exposure until, of course, they go down and they can really destroy a treasurer's quarterly performance. We saw that in recent years with the crash in the Argentinian peso, both Adidas and Puma. Well, the stock price fell 10% and the quarter was devastated, the quarter's performance, by the collapse in the Argentinian peso. So Marianna, tell us about your experience in managing exotic currencies, maybe some of the challenges, some of the anecdotes. Tell us about it.
So I will start with a very nice statement that currently in my company, I have no exotic currencies for the last, so I don't have this headache on a daily basis. But my previous company, I had, which was it was a big Greek multinational. We had like more than 15 currencies, out of which we had 3 to 4 exotic. So we had Russian ruble, we had the Turkish lira, we had the Egyptian pound, and we had the Indian rupee. So we had 4 very nice currencies that were a bit, a very big pain point for handling in general for the operations. Right. And one of the big things and the issues is that when you're talking about these exotic, and the solution would be most probably, let's start and hedge these. Okay, let's do it because it makes sense. Sometimes, the other side, the management, you have to convince that FX hedging it's not gambling, because they have it like, this is gambling. It's not something that you can do. The FX hedging is a strategy. It's not speculation. It is calculated risk to protect the company from the currency volatility. So it involves a careful analysis of the market conditions, risk exposure, ensuring stability and predictability in cash flows rather than speculative gains. And for all currencies, and even more in exotic currencies. The problem But the problem, the problem arises when it happens, right? It's like the insurance. Nobody understands insurance prior to having an accident, right? So, and when you have an accident, then it's very expensive to do it.
Right. Right. And I was about to ask you more about this. How do you say maximize exposure netting in the absence of maybe liquid of foreign exchange derivatives instruments, like in most exotic currencies?
Well, you try. Well, at least when we were talking about the Egyptian pound, right, which we could not have at that point with the Egyptian bank. We could not have a specific derivative to buy, or there were no limits, or it was very expensive. What we tried to do is we tried to keep at one point a dollar equivalent, or do like cash pooling that we had similar ones in order to match and do and counterbalance the risk that we had in the Egyptian pound. Mm-hmm. But the strategy was in general to try and find the best way to repatriate the cash when we had cash available, right? Which is very difficult as well in the case of the exotic ones, because usually there are a lot of capital controls that could not allow you to take the money very easily outside of the country. So in general, we tried to buy locally from suppliers. So what you try to do when you don't have is you try to buy locally from the local suppliers in the currencies. You try with the clients that you have to do it in different currencies. In general, there are not a lot of ways that you can handle it, right? So always hedging is the best proposal to do it. Now, if you don't have like an exotic currency and you have like a much more normal currency, and you don't want to hedge because you like natural hedging, what you do is you start looking at the balance sheet, right? So you have the receivables, you have the payables, you have some part receivables in local, some part in euro. And then what you do is you can counterbalance either with suppliers or you can counterbalance with the banks. So having debt at the local currency to have a natural hedge between the two. So these are some ways that you can work on this.
Nice. That's a short course on exposure netting. Thank you for that, Marianna. But there's, I guess, issues also in terms of control, right, and the governance. By that I mean, if those currencies can be very volatile, it's just short movements can lead to very, very big headwinds, right? Mm-hmm. How do you? And I say this because there's recent news about a Canadian company in its Brazilian subsidiary. It's not an exotic currency, but hey, it's a volatile one, and they had a problem of a lack of control. And it turns out that a currency manager did an unauthorized trade, and suddenly you're facing more than 200 million in losses. So how do you set control mechanisms there in regards to those currencies?
Policies, procedures, for sure. I mean, Treasury, as you know, Treasury has a lot to do with the structured policy and procedures. So one of the first thing that you have to do is you have to sit down and see in the company that you have a specific risk policy regarding FX. So regarding the currencies, the limits, what is the trade allowed, what is not allowed, and put specific clauses and authorizations to people that can do it, that can proceed with the transaction or not, right? And when you do it at least once a year with the annual budget and the annual strategy, you set these limits from the beginning of the year, so there won't be any, you minimize the risk in order to have an accident, right? Because, always things can happen and you can have accidents, right? Even with the best structures and with the best policies. But this is Treasury. You need a lot of policies, procedures in this part of the business. The having in the beginning the risk strategy for FX, for interest rate swaps, and in general for all the derivatives that you will be using, as well as commodities, right? So you need to have this, and you have to have a specific line. So as I say, you need to prepare a market analysis very much as you can, because what happens when you have unexpected events, right? Nobody knows what can happen. I will tell you, when I was in my previous company and we had the 13 different currencies and 14, what we always said is, let's do, I mean, you have Bulgarian leva, you have Romanian, Polish, you have factories in 10, 15 different countries. You say, okay, guys, maybe when we have one problem in Egypt, in the factory, we have a depreciation of the lira, or in Russia. Fortunately for us as a group business, we have the other currencies are stable, or they gain and they appreciate. So we will be able, the business won't be impacted, because usually what you had is you never had many difficult events happening, and then we had COVID.
Yeah.
So we had a complete market disruption. So all the currencies went out of the regular course. So we had everything that was not going, according to the plan and according to the budget and the business plan, right? But you have to prepare always for the worst case. So this is most probably, I think, the second question that you had regarding the cash flow. How do you anticipate these things? Always taking into consideration that you do not have hedges.
Right.
So what happens is, in the cash flow projection, you have your basis plan with the rates, and then what you do is, on a monthly basis, what we do is we forecast it using different rates and seeing the variances of how this is impacting the business, and trying to make on a monthly basis corrective measures and actions to protect the company and the cash flows.
Right.
Again, the best way to protect is to hedge, right? And to use the platforms and use all these different things regarding how to protect the cash flow, because at the end of the day, we need to protect the cash flow, which the cash flow is the number one, right?
We're going to go into cash flow in a minute, and cash flow projections. Just to finish up on that point about control. So, for example, at Cantos, we're believers that automation, far from weakening control, actually strengthens control. So, for example, in hedging programs, in automated hedging programs, there is no way to execute a foreign exchange derivatives transaction. It is not inextricably linked to the corresponding commercial exposure. But there's another point that I would like to ask you. So, for example, we also are believers there in a second line of defense that we call FX centralization. So, for example, you can have setups where only headquarters, not only sets policy, but is the only entity authorized to execute external trades with banks. What's your view on, generally speaking, on the centralization and no centralization debate in Treasury?
This is very interesting, because I was working as a hybrid model as well. So this is a question like centralization, what is the best model? I mean, all the groups are going back and forth with this. So what we had implemented in one of my previous companies is that we had a hybrid model talking about debt management and FX risk management, IRS were all at the headquarter level. Only the group treasurer had the capability to execute to all these hedges and transactions, and in general, the acquisition, the sale and purchase of foreign exchange at specific rates. Then we decentralized the cash flows per entity. So what you do is you have all the big decisions regarding what is the debt, what is the amount of debt, at what rates, what are the hedges, what derivatives you are to use. You do it at a centralized level, and then you decentralize all the others. So you decentralize the cash flow, liquidity management regarding all the operational parts of the business. You leave it at the subsidiary levels.
Really interesting. Yes.
I haven't worked on an automated platform. More than happy to work on it in the future as it goes, because this is one of the things with the automated platforms, is that you can close, you can lock down who can decide, who can authorize and who cannot authorize.
Absolutely. Yes.
Correct.
Yes. As I just mentioned, we think that it strengthens control and far from weakening control. Now, really interesting, Marianna, that that discussion about hybrid models in treasury management in terms of centralization and decentralization. Let's go a little bit into the topic of liquidity management in general. So ever since, as you mentioned, COVID, right? Ever since COVID, it's been at the in the top among the top three concerns of CFOs and generally and treasury managers. Also, liquidity management overall. Do you think that is likely to stay that way for the foreseeable future as a top priority in all of those surveys?
I think liquidity management will always remain among the top priorities of Treasury. Treasury is linked with cash. I mean, it was in the past, it's now, and it will be in the future, right? So liquidity management will be among the top priorities of the treasurers. And the thing is that we will always try to find the ways to protect the cash flow and ensure that the liquidity is for the business at the right time, at the right moment when it is needed. So that's why we're working a lot on the cash flow forecast in order to know what is needed when is needed. And as we are quite risk averse as treasurers, we want to have the least variations in the cash flow that we project. Okay. In general, in Greece, I will tell you, so this is liquidity management and liquidity crisis handling is something that we have done a lot. I think we are the countries in Europe that we have handled this a lot. When it started in 2008, when everyone had, all the countries in Europe had the liquidity crisis coming from Lehman Brothers, etc. For us, it took us more than 10 years to exit. We had in 2015 capital controls in Greece, right? So you could not, so it was, a very difficult period. So at least one of the things that we want to do is we are very resilient regarding handling cash, handling liquidity. And you have to be very creative, right? In order to find the cash and take it out at the right time and the right point and to bring it to the companies that you need to do. So FX is one of the things that we do not like when we're having FX risk and volatility because it brings us disruptions. But usually we are prepared like with one or two backup plans, right? In order to see if plan A does not go right, we have plan B and plan C, right? So this is what we're trying. We're trying strategically. So as I say again, I will go again with the hedging part, right? It is very important to do hedges and do hedging when you want, when you need, when you don't need it. I remember I passed the Russian Ruble crisis. We started the budget. It started like 45 the ruble, and it went within 1 week to 110, 120. Remember, and we were working on this. And Treasury was leading all the daily discussions. So we were in a meeting room, the people from Russia and the people from the HQ, we were discussing how to handle on a daily basis the cash that we had and how we're going to work. And of course, when you go at that time to say what I can do to hedge this, I mean, it's too late, right?
All right, so we've discussed liquidity management in general. Marianna, tell us a little bit about the importance of cash flow forecasting in general, and if you see a use of artificial intelligence, Gen AI tools in cash flow forecasting, because I'm interested in your answer here, because I think we have at Cantox a slightly out of consensus view, but let me have your opinion first.
Okay, so, well, the trend today is with the AI. How can AI, generative AI, help and assist in general all the departments? Treasury is one of the number one, I think, targets of AI to assist. Why? Because Treasury in general, we are quite used to automation, and we are quite used to and not afraid of trying and being innovative in different tools. I think when we were discussing about e-banking a couple of years ago, nobody was, you're going to do something that will connect your system, your ERP directly with the bank, and you will be doing this. And so it was something that was very frightening when it started like 20, 30 years ago. So we are quite accustomed and feel comfortable with AI. Now, what we are doing here is we are trying to find another pain point. So we're talking FX is one pain point. Cash flow forecasting is the other pain point. So what we can do in order to help and improve the way we're working, because almost all the treasurers today, if you ask them, they're doing the cash flow forecasting in Excel, right? So, okay, if you have one currency and we have specific clients and suppliers, it's okay. But what happens when you're operating in different markets with different currencies? So you have a very nice consolidated cash flow that brings it in the specific currency at one specific rate. What we are doing with AI is we are trying now to do, we are getting automatically all the statements of our actual cash flow movements. We are trying to generate using robotics an actual cash flow on a daily basis. And then what we want to do is machine learning, which is going to be something we will try in 2025 to see the trends in the cash flow, how it works, and then separate this, doing cash flows in foreign currencies and using different scenarios of the FX rate in order to see what will be the cash flows in this specific rate if we have an appreciation or a devaluation, which we are doing currently manually with our hands, right? So we have a scenario with, let's say not exotic, like let's say dollar 110, and we have a scenario 105, and we have a scenario of 1. So we see how the trend of the cash flow will go. So what we're trying to do is we're trying to see if we can do this more automatically and having different scenarios and AI helping in this with the different scenarios. So this is one of the cases. And the second one, of course, is that if you're doing hedging and you're having hedging policies, how AI can help you and say, we see this is the trend, this is how actually the dollar. So we propose that you do a hedging that is with this rate for the next 6 months or the next 3 months. Okay. So this is pretty much what we're trying. I don't say that I am an expert that we are working because we're trying. It's a trial and error basis at the time. Okay. So this is what we are trying to do. What we're trying to do is trying to set this up and see how we're doing it. But in order to set it up, you have to have data accuracy, correct data, everything inside your ERPs and in your systems that can help you have these logical conclusions at the end of the day. Okay.
Yes, of course. Now, and as I told you a minute ago, we at Cantos have maybe a slightly out of consensus view regarding the importance of super accurate cash flow forecasts, because we think that whether you updated your prices so very frequently, or you keep your prices stable for a campaign or budget period, and then have the ability to reprice at the onset of a new campaign period, or if you want to keep your prices as steady as possible for as long as possible, we think we have that automated FX hedging solutions. They are designed to provide a little bit of relief in terms of the degree of forecasting accuracy. But I'm interested again in the AI topic and the forecasting process, because is it fair to say, Marianna, that as I hear you describing the process, that it's not only about the aim of achieving an accurate cash flow forecast? Is it not also, I'm asking you the question, right? Because as I hear you discuss this, is it not also about reducing the cost of the budgeting process, which is really sometimes a very costly process?
It is time consuming. Whatever is time consuming, it has a lot of cost as well. Correct? Because when you do it, usually the whole organization is focused on the budget. It's not on operations, not on the day-to-day business. So you're losing a lot of things. You can lose people from sales, from their potential sales. You can lose people from purchasing regarding this. So yes, it is a very costly process. And it usually requires a lot of time from the people taking part. And
a lot of stakeholders involved in the purchasing.
All of them.
Economists, the
all of them. I will tell you this. I remember when we were doing the budget in previous companies that number one, the budget was kicked off by the Treasury. What? We provided the FX rates for the budget for the year, correct? So we went out, we did with the banks, with the solution providers, we prepared market reviews, working with Bloomberg, Reuters, whatever, whatever data we could find available. We prepared our reports. We worked like for half a month working on the projections and seeing what the most suitable rate would be, and a conservative scenario most probably, to give this to the whole organization to start working on the budget, right? So they started working on the budget, and then you had procurement that was going to go, and they needed to see for the contracts in order to start making all the agreements, what we want to do. We're talking about the factories to see what they're going to purchase, sales departments seeing exactly what they're going to sell in the currencies and what is the mix that we wanted to do. Marketing departments regarding, because so you had to discuss with the whole organization. Everyone was waiting from the FX rate, the table with the FX rate that was going on for this, and you started. And it started in October and it ended usually in December, right? And you had the revised budget as well that starts somewhere in the beginning of May and ends somewhere in the end of June. So you have an organization that is working alongside with the operations in the day-to-day to start working and focusing on this. And then at one time, you had suddenly a devaluation of the Russian ruble happening. So you had to start with the Russian factor and the Russian company. You had to start everything from scratch.
All over again.
All over again with a different rate and you were waiting, and the rate started at 40 and at 50, and you could not have different scenarios, right? Because you have to run with the budget. So if you manage at the end of the day to start automating and doing all this and running it with different scenarios, that will be a big help, not only for Treasury, for FP&A analysis, for the finance department, and for everyone in the whole organization, even for sales. I mean, if they had a very nice tool that would help them run all the sales with the different rates, that would be incredible, right?
Yes, absolutely. And it's really interesting what you say. And we didn't even discuss the operational risks involved here, the person risk, or the fact that hundreds, maybe thousands of Excel files go from here to there, and there could be data input errors, formatting errors, and formula errors. So this the aspect of time that you mentioned, the aspect of the cost and the complications, but there is also an element of operational risk involved, and that is here when we see perhaps the potential for AI to make a really important improvements in treasury operations in general.
I don't expect it to miraculously happen within the next 5-6 months, but I believe by the end of 2025 we will be talking about good solutions that will be started to be tested a lot by the market and the companies. And I want to add something small here, Augustine. We need young people in the profession of treasury, because young people are tech savvy. They are much focused in automation. They are much focused. They don't have the risk though that we want. So nice bringing generations together. The other generations to be the risk savvy and be conservative and hedge, and the young people to bring automation in order to assist this as well. So they understand. They think with the laptop. They think technical. Yeah. So they're very good in this. So it's very important, this thing.
So are you implying that automation has also, or the new tools in treasury management would also create a more appeal for young people to enter the treasury management space? That's really a very interesting thought. Is that the case?
Yes, it is. It is. I think it's one of the how can I say? It's a bait. It's a very nice bait to attract young talent. To have the technological, because they want technology and they don't want to spend a lot of time like we used to do more in the past with doing manual inputs, etc., etc. Right? They want to do things much more easier. So we have to take advantage of this, and we have to incorporate, because one of the new trends in Treasury is Treasury needs to have a systems analyst. So if you bring young people that are much more data oriented, much more systems, doesn't mean an IT background, right? Because sometimes you don't need an IT background in order to do automation, right? So you need to have people that have a strong financial background, but to be very quick in adopting new technologies, okay? So this is basically, I think it will be very interesting and very challenging as well.
Right. It reminds me of a conversation we had with a treasury consultant, Peter the Kiwit. Peter said, look, if I see young professionals who would decline a position, even if it's an interesting one, say from the salary point of view, if the company has no modern and up-to-date systems like a TMS and other more perhaps cloud-based and API connected solutions. So it's really an interesting point that you're raising here.
We will see. It is, I mean, we have to be open to this in order to and we have to be open and explore the opportunities, right? So I think it will be very interesting. It is something that we have something to wait from the future for this.
Right, absolutely. Well, Marianna Polykrati, co-founder of Tetraktys Treasury and Treasury visionary, and we could see that today. Thanks a lot for joining us today. We've discussed a number of topics. We started out with exotic currencies. We went then on to liquidity management in general, the relationship between FX and liquidity management, and we from there we discussed cash flow and cash flow forecasting as a key a key task for treasury teams. And we went on to discuss a little bit more the involvement of young people in treasury management. Marianna, is there something you would like to add?
Yes. First of all, thank you. It was really nice having this discussion, Agustin, regarding FX. One thing for sure, FX hedging is not gambling, right? FX hedging is strategy. It's not speculation. And since our role as treasurers is to safeguard the cash and the liquidity of the company, we have to have the right tools in order to manage and keep the cash in the company as expected.
Absolutely. We are on the same page. Marianna, thanks a lot and see you next time.
Thank you. Bye-bye.